Let's take a quick check on the Philippine markets. PSCI falling yesterday, Thursday, by 1/10%. And apparently, we're still waiting for the figures. And the stock market opening this Friday, it's just about started 4 minutes ago. Let's take a look at the peso that started trading about an hour ago. It looks to be stronger at 56.38 to the dollar. The local currency closed yesterday a tad weaker at 56.555 against the greenback. Haven play our fear gauge. The Philippine Treasury ended the offer period for the jumbo bond offer last April 23rd, a day earlier than scheduled. Auction results revealed the Bureau of Treasury was able to borrow 25 billion pesos in T-bills as planned due to strong demand. Total tender amounted to 73.9 billion pesos, 3 times bigger than the original size of the issuance. With us now for more is Dino Aquino, Vice President and Fixed Income Trading Head at Security Bank Asset Management. So good to see you back here, Dino, and it's been very busy on your end watching the bond market and the yields. So how did that jumbo bond issuance go?
It's very surprising is very receptive for the market. It actually reached 300 billion as of yesterday.
So that's the reason why they cut it short by a day.
By a day. Because initially, they were planning to do at least, I think, 200. The whisper number is 200. But I was surprised it reached 300 despite all these uncertainties already embedded in the market with Trump's tariffs and, of course, his non-stop rhetoric in the market. So
that's true, and it's also a jumbo bond issuance, not a retail.
Not a retail
because
bond,
in the previous years we've had retail bonds.
RTBs,
this one is non-retail.
It's an institutional bond. So
how difficult were the durations though in terms of investors choosing which durations?
Well, right now the current yield curve is quite steep. If you compare it last year, just to give you a picture of last year. The difference in terms of yields in terms of the 10-year and the 5-year was around 20 to 30 basis points, tops. Right now, it's huge. It's around 50. So that's probably, can we coin it the uncertainty premium when holding long-term bonds? So the BTR was able to award it at 6.375. I think that's a fairly decent number, decent yield, considering, and it also imputes all the uncertainties already that's currently the market is experiencing.
So from where you're coming from, is it an indication of fear or a haven bid?
It's a combination of both, I can say. In a way, we're quite insulated in terms of the tariff or the trade war. The Philippines is a net importing country. So the weaker dollar, as you mentioned earlier, it's 56.38 if I'm not mistaken. It's actually going to help our inflation moving forward to be lower because we're a net importer. So in fact, I listened to your interview with our economist, Jello. He lowered our inflation target for the year from 3.2 to 2.7. So that gives the BSP ample amount of room to reduce policy rates further, which would bode well for these newly issued bonds.
So can we take it to mean then that at the start of April 2nd, Liberation Day, investors used bonds as a fear gauge? It was more of that because this is a movement in parallel with the U.S. Treasury market. But when did the divergence occur? That, hey, we're not investing in fear, we're investing as a haven.
I think the fear started when the implementation of the tariffs began. If you recall, on that day, Trump went wild on China. He went on from 125 to 145, and then at the time, the U.S. 10-year yield had its worst week since 2001. It climbed 50 basis points in a week, in 1 week alone. That was the week where we had the holiday, April 9th. It's a good thing we're on holiday on that day. Since 2001, that was the dot-com bubble. So it was almost 2 decades that the move is that big. It's more of the market lost confidence in terms of how the U.S. is performing. So they kind of lost confidence on U.S. assets in general. I don't know if you're seeing the news on Sell America. It came out in last Monday, I think. Sell anything America. So
and buy what?
And buy anything outside of it that's not U.S. dollar denominated. The DXY is down almost 10%, I think more than 10% for the year. The equities were down. It recovered recently because he slowed down. He also recently mentioned that he wanted to fire Jerome Powell, and he also took it back. So that offered quite a relief in
And
the bond
there's
markets.
also something to learn from how he's acting or reacting, because experts in the US are saying when Treasury yields shot up and the dollar weakened, that became a huge issue because the inverse relationship is unusual. It's usually
Yeah, it's
directly
usually, yeah.
proportional. So can we then take it to mean that whenever bond yields shoot up and dollar goes down, he's going to turn?
I think it's more on the bond yields than the dollar. The dollar, in a way, it's one of his programs when he started. They wanted to devalue the dollar, cut the spending, and bring the 10-year yield lower. So every time he pushes back on his rhetoric, I recall when the 10-year, at that time when we were on holiday, April 9, I think the US 10-year reached 4.58 at that time. Highest it's been for the year. We started the year around 4.6. So basically, all the Liberation Day gains were wiped out on that day. Then he announced a pause. Again, when the 10-year yield reached 4.4 this week, he mentioned that he's not going to fire Powell. So he's really sensitive on the 10-year yield where it is right now. So every time it spikes, he softens up. So I think he's really concerned on the 10-year rather than the stock market or the dollar.
I know, that's why we've got our eyes on the 10-year
Yeah.
every single day when we wake up.
And we have a
as
jumbo
gauge.
bond on the
I
10-year
know.
also.
So about that jumbo bond and
Yeah.
also the way to go for investors, which durations then, which tenors?
I think that
given the
that
volatility?
10-year is very attractive. If we consider the inflation forecast, say conservatively at 3%, and the BSP is set to cut at least 50, as Jello mentioned. If we average 3% and our policy rates is roughly around 5, I think they still have a lot of room to reduce policy rates to at least maybe 4.5. So tops.
Okay.
Right? So 75 is the base case, but we can do another 25. I also listened to your interview with, I watched your interview with
Yes.
governor. He mentioned that the growth could move lower. The risk of the growth is to move
To
lower.
5.2%.
5.2%.
Yes.
So that's quite a big deal. If it does reach that level, close to that level, I think they're gonna reduce policy rates more.
Okay, we'll keep watch of that. And
Yeah.
this is the chart that you had sent us, and
Yeah.
I just wanted to show that it is a representation of whatever how to actually deconstruct Trump.
Deconstruct, yeah, his
is through
rhetoric,
the
yeah,
10-year
yeah.
yield.
Yeah.
Well, thank you again, Dino, and for keeping us up to speed on the
Of
bond
course, of
market.
course. Thanks for
Quite
having me.
Opaque, but people need to learn just as much as we're learning a lot from the stock market. Appreciate
Yeah.
it. Dino
Thank you.
Aquino of Security Bank Asset Management.